Hey, so Tesla just had one of those classic good news, bad news moments on Wall Street, and honestly, the story behind the numbers is way more interesting than the headlines suggest, so stick with me here. Tesla's shares took a hit after the company dropped its latest earnings results, and investors weren't exactly throwing confetti. The numbers came in and the market responded the way it usually does when expectations don't quite line up with reality. It sold off. Now, Tesla has been through this rodeo before, and if you've followed this stock for any length of time, you know that what happens in the days right after an earnings report isn't always the full story. So let's break down what actually happened. Tesla posted results that left a lot of analysts and investors feeling a little underwhelmed. Margins have been under pressure. This is something Tesla has been dealing with for a while now, largely because of the aggressive price cuts that Elon Musk pushed through to keep demand healthy and stay competitive against a growing wave of electric vehicle rivals, particularly coming out of China. When you slash prices to move cars, it eats into your profit per vehicle, and that's been a real sticking point for Wall Street. Investors want to see Tesla as a high-margin, textile company, not a traditional automaker scraping for every sale. And yet, and this is where it gets really interesting, there's a very specific kind of market energy swirling around Tesla right now that could actually keep this stock from falling too far, at least in the short term. We're talking about speculation. Not just casual speculation, but structured, options-driven, momentum-fueled speculation that has become almost synonymous with Tesla as a ticker symbol. Tesla is one of the most heavily traded stocks on the planet. The options market around Tesla is absolutely enormous. And when you have that kind of speculative infrastructure built up around a single stock, it creates these dynamics where the price doesn't always move in a straightforward, logical direction based purely on fundamentals. Traders are making bets on bets, essentially. And a lot of those bets are tied to the idea that Tesla isn't just a car company, it's a story stock. It's Elon Musk's vision of robot access, full self-driving technology, the Optimus humanoid robot, and an AI future that, if it plays out, would make today's earnings look almost irrelevant. That's the key tension here. On one side, you have traditional investors looking at margins, delivery numbers, and revenue growth and feeling nervous. On the other side, you have a massive community of Tesla bulls who genuinely believe the company is on the verge of something transformational, and they are actively trading that belief every single day through the options market. The speculation around Tesla's autonomous driving ambitions, in particular, has been heating up. Any hint that full self-driving is getting closer to a regulatory green light, or that the robotaxi business could actually scale, tends to send excited waves through the Tesla trading community. And right now, with all eyes on what Musk's political positioning and connections might mean for the regulatory environment around autonomous vehicles, there's genuine anticipation baked into this stock that goes way beyond the last quarter's profit margins. So yes, the earnings disappointed. Yes, the stock dropped. But calling this the beginning of a prolonged collapse might be premature, because Tesla's story, whether you believe in it or think it's overhyped, still has the power to pull serious money off the sidelines every time there's even a whisper of a breakthrough on the horizon. And that right there is probably the most fascinating thing about Tesla as an investment. The question isn't just what the company is worth today, but what people believe it could be worth tomorrow, and whether belief itself can hold a stock up longer than the fundamentals say it should.